Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. John, New Legacy had some bad exploration luck so far this year at the Iceberg project in Nevada, but it recently reported encouraging results for a new zone. What's this all about?
Well, let me first address the bad luck they've had. One reason I was very excited earlier this year was the Avocado Zone, which is under the gravels to the north of the north and central iceberg deposits, where they have been developing a near-surface oxide gold system whose grade is a little bit too low at the current gold price to be worth developing. They have drilled a number of holes into the Avocado target, which is a deep sulfide anomaly. Last year they got some great intersections that suggested that they were on the edge of a major fire. But subsequent holes, they've lost the holes. They have failed to get to target depth. They've been drilling RC holes. One hole did get to target depth, drilled towards the east, but it was a complete bust. There was no gold mineralization, none of the smoke that they were looking for. So it's been very frustrating on the Avocado. They do have more holes planned in September to try and get down to the target depth. It still looks juicy. They haven't killed it yet, but we still have not seen the fire related to all the smoke that they are seeing in that target. The second disappointment was the deep IP sulfide anomaly that they saw beneath the iceberg zones. And they drilled that earlier this year, and it turned out that the sulfides were basically just pyrite related to a later stage mafic intrusion that was not gold mineralized. So that killed that target. This year, rather than spending their time trying to drill out the iceberg system further, they focused on what they call wildcat drilling various new targets around the property to see if there are other significant zones worth following up. And they did get a new discovery in late July that they reported. They call it the Serena Zone, and they reported 85 meters of 0.64 grams, within which there were 13.7 meters of 2.27 gram per ton gold. Now, it's in the Devonian Horse Canyon Formation, which hosts Carlin-type mineralization. It's brecciated, silicified, so it's been pumped. It's somewhat offset from the North Iceberg Zone, about 400 meters to the west. There's a fault in there that may have displaced stuff. This zone starts at about 100 plus meter depth. They just started going in there to drill 3 more holes, vectoring away from the initial hole to see where this system goes. So this is the sort of new emerging focus, decent grades, reasonably closer to surface. The problem with the Avocado target, we're dealing with depths of greater than 300 meters, which is why they end up having problems getting the hole to target depth. It is still worthwhile to find deep targets, because if you're talking like a Cortez type of deposit where we're talking high grades and it is worth underground mining. In this case, we're dealing with a shallower target. They've also got a number of wildcat holes pending in various targets. For example, there's the Jasperoid Basin area to the east of Iceberg, where they've got a number of holes in that they're awaiting assays in. But the focus for now is this new Serena Zone, and they hope to have results by middle of September, which will, of course, be the season when conferences start up again.
Discovery Watch with John Kaiser. We'll be right back after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario. With grab samples running as high as 32 grams per ton gold, a drill program will commence this spring to test the numerous targets located by recent groundwork. For more information, visit our website, rmroyalty.com.
Welcome back. We're chatting with John Kaiser. John, a couple of months ago, you predicted a sizzling scandium summer for Scandium International Mining Corporation. Judging from the lackluster stock performance, it looks like someone turned the thermostat way down. What's going on?
It seems that I forgot that right now it's actually winter in Australia, and this is an Australian project. But jokes aside, the problem is when the company finally got the agreement from the Evanson family that they were going to convert their 20% Nyngan property interest into about 57 million shares. This was a large enough transaction that it has to go to a shareholder vote in a special meeting, but it also had to go for approval to the BC Securities Commission and the SEC in the United States, because this company is a U.S. filer in addition to being a Canadian filer. So being summer, that dragged on longer than expected. The initial meeting plan for August 24th had to be postponed because the go-ahead from the regulators was not in hand. The new meeting is September 11th. In the meantime, the Evansons, who really don't have any stake in the company until this transaction is approved, they've been in the background, not mobilizing any new market interest. The stock has suffered from, there's no new money coming in. Kaiser is busy talking about this brand new Novo story in Australia, which looks very exciting. So we're seeing the existing shareholder base start to erode as they sort of sell stock to chase after something new like Novo. However, this situation is not going to last too much longer. In about a month, we'll have the approvals in place. And it's not true that there is no new money in. While I was in Australia, I sat down with Andy Gregg, and he owns just about 20 million shares, which he bought a couple of years ago at 10 cents. Basically rescued Scandium International from defaulting to the Evansons on the Nyngan project. And he told me that $250,000 of the last $1 million financing at 30 cents, no warrants, done in late June, was taken down by his buddy Lee Clifford. Now, you wonder who Lee Clifford is. Well, it turns out he's the chairman of Qantas, which is Australia's big airline. And so you think, okay, well, this guy must know something about aerospace and the implications of aluminum scandium for lighter planes and so on. But that's not really what's interesting about Lee Clifford making this investment. He was with Rio Tinto for 37 years. In fact, he was CEO from 2000 to 2007, a period during which Rio Tinto teed up to acquire Alcan and enter the aluminum business. So he knows a fair bit about the aluminum business. In addition, during that period, Rio Tinto ended up getting its mitts into Oyu Tolgoi, Robert Friedland's big discovery, through the original Ivanhoe, and ended up squeezing Robert out. So this guy, Lee Clifford, he is no slouch when it comes to the mining game. He's also been associated with Bechtel, where Andy Gregg was the global mining unit head until he retired a few years ago. So this $250,000 is probably chump change. I would say it's almost like he put that money up so that he has a reason to pay attention to this company for the opportunity when it's time to put some serious coin into it. Now, the next opportunity for doing that is the company needs to raise about $110 million Canadian to put Nyngan into production. And this is what we're waiting for the Evansons to basically tee up, because the current management does not really have the marketing cachet to go to Bay Street or even Wall Street and persuade the investment bankers there to put up any sort of money. But when you have groups like Chris and Peter Evansons with deep experience in the financial markets, as well as Andy Gregg and now Lee Clifford there in the background, once this deal is done, then we'll see something completely different. Now, one of the things that shareholders of Scandium International are worried about is, okay, the stock was almost at 50 cents earlier this year when everything was coming together. Almost everything except the financing is now together, but the stock has sagged to 30 cents. Does this mean we're going to have to do a financing at 30 cents? 370 million shares at 30 cents. So what I've done is I've done an analysis to figure out, what is the implication of the various prices? So at 30 cents, they'd have to issue almost 400 million shares. But at 50 cents, they'd only have to issue about 220 million shares. So I have just published a major update on Scandium International in which I analyzed this company in terms of cash flow multiple valuation model, which is different from the net present value, which simply takes the annual cash flows over the life of the mine and calculates the net present value. And usually, when a junior discovers a deposit, pushes it through feasibility, the way the market prices it, it takes it, the net present value, and assumes that some sort of percentage of that is what a bigger company will pay to buy out the company and put the project into production. But because of the special nature of scandium as a metal where the company will in effect pioneer the creation of offtake market for this obscure metal, no big party is likely to do that right now. So the company is pretty much stuck financing this project on its own, demonstrating to the market that indeed it can produce scandium and make a profit at $2,000 per kilogram and find a market for the scandium oxide. So in this analysis that I've done, and it will be unrestricted 30 days from now, mid-September, right around the time that approvals are in place, I've modeled both the current feasibility study-based scenario producing 38 tons of scandium oxide per year, but I've also modeled two expansions, 5 times, or doubling it in year 5 and doubling it again in year 10. And when you look at this as a growth story, then this thing starts looking pretty interesting. Then even at a 30-cent financing, one can see prices in the $2 to $4 range in about 3 to 4 years. But the question really is, will this work as anticipated? And somewhere in the next while, when we get this financing done, we will see an inflection where the market stops being skeptical that this thing is not going to work to starting to believe that it will work. And then once that inflection happens, then you will start seeing the market want to price this story as something that is a growth stock, very different from a gold deposit. A gold deposit is always put into production on an optimal basis to deplete the economic resource. In this case, we have a resource which at the proposed sale price of the metal, it is way bigger than what is actually being put into production. So it's a growth story in the sense that as they demonstrate the first level of production, demonstrate to the off-takers that, yes, this is reality, and in the process stimulates interest in the metal so that there is more demand than there's supply. They simply reinvest the cash flow and expand production, and they can do this several times before that deposit is at its limit. And then, of course, they have Honey Bugle, which is not that far, which may be bigger and richer, which could also come on stream. So right now, Scandium International has the first mover advantage. Once that $100 million is in place, then the market's perception will change considerably. The glass will go half full, and we will finally have that scandium summer that I was talking about, except the timing it'll be the Australian summer during which this happens.
We'll have more with John Kaiser right after this.
Aven Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aven's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avenresources.com.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
We're chatting with John Kaiser. John, you just spent a week in Australia visiting Novo's Karratha project. Since we last talked, Novo released astonishing bulk sample results. What do you make of them?
Well, on August 8th, the company released the results of what turned out to be about 542 kilograms of material that they jackhammered from the conglomerate bed exposed on the Purdy's Reward project. And they subjected it to a specific sampling technique. First, they crushed the rock to -2 centimeters. Then they used a Steinert sorting machine, which uses X-ray technology as well as the same technology that is in metal detectors to separate those pieces of rock that dinged for the presence of a metal, which in this type of rock is only going to be gold, nothing else. Diverted that into further crushing, picked out all the gold nuggets, handpicked out all the gold nuggets that showed up, and then crushed it finer, and eventually assayed the rest of that. And the other part, which ended up being about 12.5% of the so-called tailings that ended up in the other bin, which the sorting machine said there is no gold in it. They also crushed and fire screen assayed this. They combined the two results, and they came up with an astonishing grade of almost about 2 ounces per ton for the combined sample. Now that was much bigger than anybody really expected. And so of course everybody says, well, that's the result of the nugget effect, that you're dealing with a conglomerate bed, which is similar to the Witwatersrand, but you've got even bigger nuggets than are present in the Wits reefs. So yeah, it doesn't mean anything. However, when you looked closely at it, the portion that generated the tailings, which was only between 12 and 16% of the original sample, they also reported the assays for that portion. And this is what the sorting machine said. There's no gold in here. Whatever gold was in there, the particles were too small to register with basically the metal detector system. So this is fine disseminated gold in it. And this came out at an astonishing 9 grams per ton. Now this is really important because the challenge for a very severe nugget effect, such as exhibited in the conglomerate beds at Karratha, is, as Quentin Hennig describes it, it's like a raisin cake. If you're trying to use a straw to pick the raisins in a raisin cake, odds are you're probably not going to hit the raisin. And when you do hit the raisin, well, then you've got a big raisin. And so when you start stepping down dip this bed and drilling holes in it, 2 to 3 inch diameter holes, the odds are you're going to get dud results most of the time. So you won't really have a sense of what is the grade of the system. But if there is also a fine disseminated component, and it's coming in at 5 to 10 grams per ton, that's an economic grade for underground mining. Certainly for open pit mining, that's the portion of these beds that is close to surface. Then it is possible that you can use simple stratigraphic drilling to find these beds and measure the base load disseminated gold in it, and then apply more of a sort of a large diameter drill sampling approach to pick out the degree that the nuggets are in there. So this is only one sample from a 2 by 2 meter pit in the Purdy's Reward conglomerate bed. It has a fantastic grade, which is like $2,500 rock. To what degree it will be repeated, We don't know, but they did publish photographs of the gold nuggets that they got out of that. And it wasn't like they got one big nugget, which generated the, most of those 2 ounces. In fact, it is a large number of nuggets of varying sizes. So again, one could argue that perhaps they all ended up in this one little spot, and then when you step out, this will fizzle away and it'll be nothing. And that's the big debate in the market right now. But part of the whole benefit of being over on this trip in Australia was to see the scale of the distribution of nuggets. Now, interestingly, Quentin told me that a week ago or so, Newmont, which is the second largest shareholder in the company, Eric Sprott is the largest shareholder, it did a site visit to see what this new story was all about. And Newmont initially invested for the Beaton's Creek story, but kind of lost interest when drilling down dip failed to intersect substantial grades, and the company focused on the sort of smaller scale, 300,000 ounces, hoping to put it into a sort of a cash cow type of thing to fund operations elsewhere. And they were almost wanted to sell their block, have Quentin find a home for it. Well, when their geologists came on the site and looked at the sort of beds, and they're all this sort of a reddish colored rock, very, very unimpressive, they thought they were being pranked. But eventually they got their head around it and ended up taking a sample themselves and used their own metal detector to break up, they broke up the rock from the bedrock, put together a sample, used a metal detector to make sure there weren't any gold nuggets in there, and went home with a sample that would be very similar to the sorted tailing sample. So one of the big questions we're hoping to hear is what Newmont found. And it's kind of interesting because I've called this whole thing the Bre-X redemption, because it almost has a parallel to the big Bre-X discovery in Indonesia. A lot of skepticism in this case, precisely because Bre-X was such a big betrayal and disappointment. And it's funny, we had groups like Barrick and Placer also visit the project and took samples from the Busang deposit, and never ever really reported what those results were. And so in a sense we're repeating history where the majors are quite intrigued by what's going on here. They're taking their own samples. And it'll be interesting to see what happens next, because the company needs to balance Newmont as a partner. One of its biggest fears right now is they get a preemptive bid from somebody who understands the enormous scale of this story. And so getting other groups, potential big producer companies in there and doing a financing, say something, $50 million financing, so they have more than enough money to properly test this thing, and get another major shareholder in there to balance Newmont, which right now has a head start on everybody else. That's going to be a key upcoming milestone for this company.
John, can you tell us about your visit to the Karratha region?
It was fascinating to tour this area with Quentin. It's fairly flat-lying, but it has these hills made of basalt. Sometime after these conglomerate beds were laid down, the region was flooded by what they call the Kalina basalt, and this is a dark rock, a volcanic rock. It came up through a fissure, a dike-like fissure, and it just flooded the entire region. And this was interesting because it ended up protecting these conglomerate beds. And there's a whole controversy about how gold ended up in the Witsa conglomerate beds, which I'm not going to get into now. But what we do know is that nuggets were distributed over a large region. And one of the things Quentin did was show me the scale of the kind of nugget hunting that fossickers, which is the sort of Australian word for prospectors who use a metal detector to try and find gold, have been doing for the past couple of decades in this region of Karratha, all the way to the coast, which is about 30 kilometers from where the Cometwell and Purdy's Reward conglomerate beds daylight. And they have been finding nuggets with their metal detectors over a large area for quite some time. And we went and sort of drove over this area, and Quentin pointed out, you see this bedrock here? This is 3.6 billion year old basement rock. The conglomerate bed and the Kailina basalt, they're about somewhere between 2.7 and 2.9 billion years, which is also the age of the Witwatersrand Reef in Australia. So the implication was that, he says, this area here has been flooded by ocean, rising sea levels, numerous times. And in fact, the craton extends another 300 meters under the ocean to the north, basically a continental shelf. And what we ended up sort of observing was that these nuggets that the prospectors are finding no longer associated with any conglomerate beds. They are remnants of a conglomerate bed that extended over a substantially broader region than we now see. Right now, we have based about an 8-kilometer daylighting strike of this stuff, a bed that dips southwards into the basin. But by looking at the distribution of all these nuggets, which the ocean has waves and that have reworked on the surface of this for who knows how many years, this bed probably extended another 30 kilometers to the north, which is now since being eroded away. So that was one of the impressive things, was to understand the extraordinary scale of this story. Now, when we went to the Comet Well project, we did find a couple of fossickers there coming up with nuggets. For their morning's work, they had managed to find about 2 grams of nuggets. I've got a photo of them in my in a report I published earlier this week, and that was worth about $100 for these people. Now, since September of last year, when the area where these beds daylight was discovered, there have been thousands of holes dug by fossickers. They go into this area with their metal detectors and walk around. They'll even go and set these fires, which mysteriously happen and burn off this nasty spinifex grass, a sort of a spiny grass that covers everything and makes it difficult to get close to the ground with a metal detector. And then the next day, prospectors somehow in the know are swarming all over with their metal detectors. And they also do things like take their cars in there and attach some sort of scraper to it, and will literally scrape the gravel, the rocks away, so that they are closer to gold that perhaps hasn't been detected by past metal detectors. So this has been going on for the past 12 months, and the company has developed an interesting strategy for exploring this. Alan Ronk, who worked for Novo on the Beatons Creek project, he ended up being let go over a year ago because there was nothing more to do at Beatons Creek in terms of exploration. He ended up working for Artemis Resources, which last November put out news that they had found this gold in bedrock when they followed up all this prospector pitting activity on their property. And they didn't really understand what it was. They called it some sort of mafic rock, which was really sort of interesting. But they ended up hiring Alan Ronk to sort this all out. And then they put out a news release in February which properly described this as a conglomerate-hosted gold system. And since then, Alan Ronk has been back to being a free agent. And Quentin Hennig, he actually saw this news release and ended up contacting Alan and realized, my gosh, what we've been chasing here, 350 kilometers to the southeast in the Beatons Creek area, actually exists on the other side of the basin. And the reason nobody ever saw it was because these Kailina basalts cover nearly everything, and there's only a tiny strip where this daylights, and it's been covered with dirt. And the prospectors out there, they were randomly finding their nuggets in this area that's been scraped clean. So it was just a coincidence that somebody had managed to finally work their metal detectors over the area where the conglomerate bed daylights. So what Alan has done is, with this plane that he built, he has outfitted it with cameras, and he takes what are called ortho photos, where he flies about 40 meters above the ground and takes these photos of a very high resolution, and they print this all out, and then he manually goes through there and finds all the little pits. So all these prospectors have, in effect, been doing the mapping work that will enable Novo, when finally the exploration licenses are granted and they get a work permit, to go in there and start trenching and stripping and trenching right away, knowing exactly where this conglomerate bed daylights. Because this is, in effect, something similar to what happens in Africa or South America when a new high-grade shear zone, gold shear zone discovered, and it's immediately swarmed by artisanal workers who beaver away, and of course they don't waste their time where there isn't a structure, gold-bearing structure. In this case, we have the Australian Army of Metal Detectors walking around. They're not going to keep walking if their detector stops beeping. So they have literally mapped this 8-kilometer stretch of daylighting conglomerate beds. And the other big news that happened this week is that the deal with Artemis Resources, the Australian listed company, whereby Novo gets 50% of all the conglomerate bed hosted gold mineralization, that deal finally closed. There was a bit of uncertainty. It looked like Artemis didn't really want to do this deal, which is actually a pretty good deal for Novo. But Novo ended up sweetening the pot by throwing in 4 million shares, which will be restricted for a year. And at the current price, wow, that's like a $20 million windfall for the company. But the scale of this story is so big that this could even end up being cheap. The important thing is the Purdy's Reward property. It is already granted license, and the company has permits to do work on it. And so when this deal closed, it means that Novo can go in there and bring all its expertise with assessing conglomerate bed-hosted gold mineralization to bear. They will start stripping the beds. They will run through these channel samples across, create many more bulk samples, and then set the stage for starting to drill down dip stratigraphic holes to start mapping out to see what the actual dip is and start giving us a tonnage footprint. So 2 major steps coming. One, what is the continuity and consistency of the gold mineralization within at least the anywhere from 1 to 3 kilometer portion of this bed that we know exists on the Purdy's Reward ground, and how does it behave down dip? And that's what I call the local freak show story. The bigger story is the WITS 2.0 story, which suggests that, as in South Africa, there may be about 100 to 200 kilometers of striking conglomerate beds that dip down perhaps for another 50 to 100 kilometers. And that's the giant story, the WITS 2.0 story, which would make this, if this actually is confirmed, this would be the biggest gold discovery since the South African gold fields in the Witwatersrand Reef were discovered in 1886.
John, thank you so much for the update.
You're welcome, Jim.
We've been talking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howestreet.com. Discovery Watch is a production of Howe Street Media Incorporated.